Okay, so guys, we are at the end of the year. 2022 is about to be a wrap here in 2 weeks, and it's been a rough year as far as assets go, right? Everyone's been getting killed. Real estate, stocks, crypto, especially, everything's been going down. Bonds, you name it. So, wanted to start here with the 2 year. Okay, so this is the 2 year Treasury. So we're looking at the bond market. If you guys don't know, there is 4 times the amount of money floating around in the bond market as there is the stock market. So this is why a lot of financial gurus say that the bond market really is telling a story or is telling us something. They look to see what the bond market is doing in order to have a forward kind of looking projection on what may be happening to assets down the road. So I really learned this over the past couple of years, and it could not be more accurate with forecasting stuff. Okay, so we're kind of looking here at the 2 year. So this is kind of general credit. So this would be like definitely short term kind of loans. The 10 year is kind of in control of mortgages. So the 10 year is definitely peaked out, but we kind of peaked out here at about 5%. Gosh, I'm going to shrink my head again. So if we go to this chart and we pull up some of my indicators here. So this indicator is great at picking up supply zones, demand zones. Demand is where buyers are, supply is where sellers are. You can see we kind of really just hit pretty hard off that 4.95% mark. So that's kind of where the Fed's going to try and get to. I think we are at 4.3. So they're going to go a little bit higher, but they are definitely not going to go higher than 5. So the bond market is already reacting, pivoting before the Fed funds. So everyone is kind of freaking out about, oh, they're raising rates, they're raising rates. Well, you don't got to worry about it because the bond market's already telling us that they're gonna start cutting eventually. So um, what I wanted to kind of show you guys here is when you look at these charts. Oh, okay. So all they really do, okay, the Federal Reserve, all they do is just follow the 2 year. And this chart right here shows you exactly that, right? They just follow what the bond market is doing and telling them. So, and of course, this cycle is no different. They are doing exactly that to a T. They're following it perfectly, okay? So when you see this kind of flip, so in 2019, you can kind of see them cross right there. Um, that's when you know that obviously there's kind of a difference, and then the Fed's going to change their tune as well. Now assets don't hit a bottom when they do that cross, right? So they usually hit a bottom after a few cuts, to be honest. So I think we've got some downside still left to see. So I'm thinking kind of in the spring, we'll be probably at a bottom at that point. So we're still getting there. I would still be getting some capital in because you don't want to miss. You don't want to be waiting for an exact bottom and then miss it. Um, the chances of you picking a price target and missing it, it could happen, right? So you definitely don't want to try and catch the exact bottom and try and do it all in one order or deploy all your capital all at once. And then even if you did do that, you may not catch the bottom, right? So you want to be layering in to positions and layering out when you sell. So definitely use that as good practice. Layer in, layer out. That's one thing you want to be looking at. So we can kind of see here that now we know what most people don't know is that the Federal Reserve just follows the 2 year. Okay, so if we look at the 2 year and kind of do a little bit of technical analysis, okay, and I've studied this a good amount, right, doing TA, and I can tell you that this is a peak. We're going to start heading lower. That's just in my experience from things that I've seen over and over. We can now kind of, put a investment thesis around this and know that credit is going to get better. And one way we can kind of also be sure is this is the futures curves for interest rates. What do you see? You see kind of a peak around the spring, and then all the way until 2025, we're heading lower. So asset prices are gonna get better all the way up until rates tick up a little bit at the very, very end of 2025. So that's pretty awesome. And what's super interesting is that fits within the Bitcoin cycles perfectly. So let's look at that. So here's the Bitcoin cycles. They're 4 years. The halving is when the mineable supply of Bitcoin gets cut in half. Okay. So that creates more scarcity to the asset. And every time we see the halving, the last halving was right about here. Obviously, it went ballistic after that. So each time the halving happens, it's always coincided with the asset rising. So the next halving is going to be on, let's see, I think it's March or April of 2024. And then towards the end of, so where's that going to be? So yeah, exactly, right at the end of 2025, right when interest rates start going up. It fits that next Bitcoin cycle perfectly, okay? If you guys don't know what the Bitcoin cycle is, it's 4 years. Do a little bit of research on it. But it's fairly simple. It's a 4-year cycle. There is a kind of, basically, the halving is just programmed into it. It allows the miners to mine less Bitcoin, and it keeps cutting in half the amount that can get mined into existence. So I won't go deep into detail on that. Hopefully you guys can figure that out on your own. That could be a whole video within itself. Anyway, so what's super cool is it lines up with the cycle, right? That this next kind of futures curve that we're looking at for interest rates, which is great. And all of the risk is basically out, right? Like we've already seen so much downside. This was all risk. Buying up here was risky, although a lot of people were like thinking this thing was going to go to 100,000 and would never come down to 18K where it's at now, or sorry, 16,700. Okay, nobody thought it was going to come down here, but of course we're here now. All the risk is out, right? So you want to be buying. You want to be layering into different assets, and everything's the same. Everything got hit because credit got tight, right? Asset prices are all based upon credit. So Bitcoin obviously is at a good buy level, and just kind of back to this, I'm kind of just drawing this little rounded bottom, right? So this is kind of just theoretically when you're layering into assets, you want to try and make it a rounded bottom. That's what you're looking to catch, right? You're never going to catch the exact bottom dollar price, but you're going to get in at a pretty good average. So Ethereum, we're looking at some pretty good demand zone right here from about 1125 to 1000. If you get it below 1000, that's great. I think that we'll probably kind of just chop around in here until spring, and then we're going to kind of see probably a pretty good pivot. If it does break, we're probably heading into this kind of 600, 500 range. We'll see though. We'd have to kind of see a pretty good sell-off in stocks, which we could. That could happen. So I would be, prepared for all situations. But we know that we are at a really great buying opportunity. Interest rates are going to get much better. That's going to send assets up. So regardless, the risk reward, right? This was all risk up here. All the risk is out. We don't have that much more risk to spare. So just to kind of show you guys what I'm talking about with the risk reward here. Shoot, gotta shrink my noggin here. Let's see here. Long. Okay, cool. Yeah, there we go. So this would be reward, and I'd say, what did I say? Risk is down to here, right? So, I mean, look at that. Okay, reward in the green, risk The risk is smaller than the reward. Okay, so think in those terms. Everyone's freaking out and not buying, and they're not paying attention to stuff like this. Risk reward. Okay, all the risk was up the top, but people were buying the top. They were taking on a ton of risk. Okay, so flip it, right? Flip that thinking. Everyone is bearish. Everyone sentiment is super bad. If we go to, let's get rid of that. If we go to like the, no, it's not this one. 72 median sales. Where are we at here? Okay, here we go. Yeah, so consumer sentiment. We actually hit it's crazy. We hit like a 40-year low in consumer sentiment, right? So everyone's bearish basically, right? And so that gives you a reason to do the inverse. If we do a comparison, the S&P definitely coincides with some stuff like this, right? And so if you guys don't have an account on TradingView to look at some of the stuff, I highly recommend you do. But again, when sentiment was at like all-time highs back in 2000s, market was screaming up, right? And then of course, sentiment low here in 2008, market was down. So when you see those big swings, it's telling you something. It's telling you you're at a bottom, you're at a top, whatever, right? It's never one thing you want to look at, but there's a series of things that we can look at to paint a picture and see where we think things are going to go. Okay, it's never guaranteed, but there's probabilities. The probabilities are growing that we're getting close to pivoting to the upside. So let's see, what else do we want to look at? So let's just look at the S&P as well. So from here we hit a little supply zone. We definitely sold off. I went short the past couple days, caught a nice little run. Now we're kind of heading into these demand zones, and we'll see if it catches a bid here. Let's go in a little short term. Let's go to like a 2 hour. Yeah. So again, we've got all these levels here, and it could go beyond it. It could go, it could tear down into this kind of 1330 range. A lot of people have been calling for that. But when there's more people that are expecting it, it's more likely to not happen because the market always does the opposite. You got to be smarter than the herd, not bet with the herd. So are we going to get caught in here? Are we going to get caught in here? Are we going way down to here? No, definitely not. Okay. Somewhere in here, we're going to catch a bottom. We're going to pivot. Everything is looking like that. Okay. And that's no surprise because assets all kind of move the same way. Plus the dollar is rolling over. So because things are priced in dollars, if the dollar is super strong, then that's bad for assets. When the dollar is weak, that's good for assets because things are priced in that currency. Now, shrink the head. We can see here that the dollar came off a huge number at like 115. And if we go back, let's go back like on a monthly chart. Yeah, so I mean, so you look at that kind of supply zone there, that was a kind of a big area of resistance. It appears to bounce off of it. And yeah, I think it's going to probably weaken from here. So is it going to zero? No, the dollar is not going to go to zero. Contrary what we would think when we're printing trillions of dollars. However, the world is on a dollar system, so it will continue to be in demand and a need for quite some time. But obviously, inflation is going to kill you. You have to be in the right assets, right? But then shift to dollars when it's right. Obviously, from let's see, basically June 21 a lot of big investors were selling into dollars, and that's why there was a lot of money moving into the dollar out of assets, and also assets were rolling over. So that was telling you that you had some headwinds on assets as well as interest rates. Okay, so what else do we want to look at here, guys? So another. Do I have it here? Yes. Okay, cool. Another good ETF that I like to look at is Kathy Wood's ETF ARC. So you can see here that we're at the 2020 lows. So again, that tells you, we're pretty much as low as we can get for a lot of different assets. Another stock I'm watching is AI, and you can see here on the daily chart. I mean, look how flat this 200-day moving average is starting to get. We're definitely flattening out. We're catching that rounded bottom, right? So different assets across the board, they're all doing this. So again, we're getting really close. Mark my words, spring, we're gonna hit a pivot. Okay. So hopefully this helped, guys. So again, take a look at some of these charts for the 2-year, the 10-year. Real quick before we go, let's look at the 10-year, and you can see this is what mortgage rates are priced off of. We hit a big peak here, and we've been going down ever since. We may flip up a little bit, but I think we're gonna keep rolling over. We're gonna keep heading down. Okay. So everything's gonna get better from here. Be sure to be looking at buying. And if you do get crypto, make sure you do self-custody. Look into getting a ledger device. You can do a Ledger Nano S or Ledger Nano X. They do have their new product, the stacks, as well. Because if you do not have self-custody, you take on third-party risk. You take on third-party risk with FTX or Binance or Crypto.com. Okay, so if any of those companies go bankrupt, you lose your funds. I have some friends who lost lots of money at BlockFi. I lost some money at BlockFi. Luckily, it was a really, really small amount. I had most of my stuff on my ledger, outside the exchanges. So you want to make sure that you're using a ledger device or a Trezor or whatever it is to self-custody your funds, okay? So do not keep your stuff on the exchanges. Be smart, and do not take on third-party risk, okay? Even think back to when gold was confiscated. People had gold in safety deposit boxes in the banks. The banks took their money. Okay. Well, the government did, but the banks allowed them to. They had third-party risk because they had their gold in the banks. So anyway, want to let you guys know, flip the script. You should be bullish from here. Everybody is freaking out and running for safety. You should be running to risk assets right now. You should be running to the things that are pummeled and destroyed. And let's look at just one more thing. Okay. Think about this. Think about what this says. Jim Cramer urges investors to exit crypto. It's never too late to sell. This guy's always wrong. Go back and look at his track history. He makes terrible calls. But if you listen to this guy, you'll buy the top and you'll sell the bottom. So do some more Google searching on some stories and sentiment out there. You want to be buying bad sentiment. Okay, we're already so far down. So, all right, well, cool, guys. I'm gonna wrap it up. But we do have a really cool meetup coming in January, so hopefully you guys jump on for that. We are going to be talking about new ground-up development in Texas, so that'll be really cool. If you guys have any questions or things, feel free to reach out, contact me. Hopefully you guys know where to find me. So, alrighty, guys. Adios. To a better 23.